EnglishForEconomists.com. Hello and welcome once again to English for Economists, the weekly business English podcast that teaches you the vocabulary you need to talk, read, and write about the economy in English. Special welcome to all of our listeners from all over the world. Today, our topic is microfinance. I'll give you your vocabulary first. It's a much longer list today, so listen closely. And remember, you can always jump back and listen to this section a few more times if you need to. So first word, microfinance, the title of our podcast. Well, microfinance refers to the financial services provided to low-income individuals or groups, people who are typically excluded. They are kept out from traditional banking, microfinance. Working capital. Well, working capital is the money that the entrepreneur can use for day-to-day operations or to purchase transport or other equipment. Microcredit. Microcredit is a part of the field of microfinance. Microcredit is the credit to low-income entrepreneurs. Another way to say microcredit is microloan. Microcredit, microloan, that's all part of microfinance. Collateral. Collateral is something offered as security for the repayment of the loan. Collateral, that's a guarantee that the bank or lending institution can take back if the borrower does not pay collateral. Unbanked. Unbanked is a term used to describe the world's working poor who are outside of the formal banking sector. They are unbanked. They are not banked. Unbanked. Micro-entrepreneur. Well, micro-entrepreneurs are people who own small-scale businesses. These are also known as micro-enterprises. So micro-entrepreneur owns a small business, also called a micro-enterprise. So micro, as a prefix, means something tiny, very small. Opposite would be macro. So a micro-entrepreneur. Financial inclusion. Financial inclusion happens when people have access to a range of banking products at affordable prices. So financial inclusion is when you have access to those products. Group lending. Well, group lending happens when a group of people make a collective repayment promise. They promise together. They pledge. I want to remind you that last week we saw pledge. Remember, pledge means to promise. Sponsor. A sponsor is an individual who supports a borrower. They are sponsoring them. All right, so a lot of words this week. Microfinance is a way to get working capital into the hands of micro-entrepreneurs so they can fund their small businesses. Now, these microloans, by definition, are small, but even a microloan can make a big difference to the borrower because it will allow him, or more frequently her, to buy merchandise to resell, or to buy supplies for production, or to invest in a means of transportation. And transportation might be something as simple as buying a bicycle. Microfinance puts money into the hands of micro-entrepreneurs, giving them a chance to grow. Well, microfinance and microcredit, microloans, fills a need because traditional banks don't like to lend money to people who have no financial history and no collateral to offer as a guarantee. Microfinance solves this problem by replacing the need for collateral or formal documentation, credit history, with another system, a system that guarantees repayment of loans, but it's a different kind of system. It's a system based on social networks, which come from trust and familiarity. These so-called trust networks are groups that have joined together to somehow guarantee each other's loans. People in a trust group will recommend each other. They will sponsor each other. They support each other. And they encourage, and they might even help each other pay back their loans. Microfinance can also be one-on-one. It doesn't necessarily have to be a group. It can be one lender, one borrower. But what builds the trust there is a high level of familiarity, because there is a high level of contact between the lender and the borrower. That personal contact is frequent. So when all of these methods work as planned, the microcredit system can grow, and eventually the goal is for the unbanked to become banked, eventually moving into the formal banking sector. Once the unbanked have established a good credit history, they can move over into the formal banking sector. Okay, well, it's a very interesting story, and this, of course, is just the most basic summary, but this was a good opportunity to use some of the fantastic words from the world of microfinance. Okay, let me leave you with a couple questions that you should really think about in English right now, just to keep this fresh in your mind. So, how has microfinance succeeded in your country? Is the microfinance sector growing, or is it getting smaller? Why do you think it's growing, or why do you think it's getting smaller? Okay, friends, you can always jump back to the beginning of this podcast and review the vocabulary if you need to. Okay, so again, the homework is just form a few sentences in English and practice those in your head. Answer the questions I've just given you. Maybe you could even write those answers down. All right, that's all for today. Thank you so much for joining me for this episode of English for Economists. A special hello to my listeners located in Spain. As of today, there are more listeners from Spain than any other country in the world. People, in conclusion, you can find the English for Economists podcast on Spotify, iTunes, Stitcher, and more. It's also published on the webpage, which is also a good place to contact me if you are interested in taking private classes. EnglishForEconomists.com. Take care.